Welcome to Live Trading Nation, everyone. I'm Todd Gordon. Last week we were trading technology. We're doing the NASDAQ. The composite just hit a new intraday high, and here's why I still like the space. If we actually just move in here, we've got technology, we've got the S&P, we've got the Russell, we've got a broad-based rally going on here, and technology is certainly leading the way. Last week on the Trading Nation website, we actually were looking to buy a pullback post-Fed in the Qs. As we move into the chart here, I'm just going to pull up a short-term little 60-minute here. Let me just pop this guy out. And we were looking to buy a pullback towards the 110.5 area on tradingnation.cnbc.com. We were filled. We have the entry now post gap up. The stock is kind of holding here right around 110.50. I continue to be long the stock. I have a long NASDAQ position. Another consumer discretionary that's performing very well, NASDAQ, is Starbucks. XLY, that ETF, continues to form to the top side along with healthcare. And we have bonds breaking down. We're going to talk about that later in the show. So good volatility on a Fed that just gave us nothing, but for the bulls it was really everything. So I'm going to continue to be long until we really need to face higher interest rates. So that's what I'm trading, really carrying not a lot of positions right now, just sticking with the NASDAQ, sticking with the Qs. I'm short gold. I'm long the euro via the FXE with clients, so we'll talk about that, but really not carrying a lot right now, just kind of maintaining position. So enough about me. Let's go to the phones. Today, we have a very special caller all the way from Paris, France. Mathieu, how do I do in the pronunciation?
Mathieu. It doesn't matter. You can call me the way you want.
You're like my favorite caller. It's Mathieu?
Mathieu.
Bienvenido.
Bonjour. It's such a pleasure to talk to you. By the way, it means that the show is so big today that we had to do it from two different continents, and perhaps we could rename Trading Nation Trading World. I don't know what you think about that, Todd, but
we've actually had some internal discussion about that. It should be Trading Nations, plural. It's not just one nation. I mean, this is a global trading environment. So I agree with you. Let's talk to the producer after the show. What's going on? What are you tracking here, my brother?
Okay, so today I'm looking at the TLT. I'm a European investor.
Yeah.
I have little money, not enough to put that at risk by investing into equities. So I'm looking at the TLT. I think the yield is quite compelling there. I'm willing to take the currency risk, because the likelihood of the euro rallying back to 140 is pretty remote at this point, in my opinion, at least. The problem in Europe is that fixed income, again, trumps with no income at all. That said, I'm quite concerned about the Fed, raising rates, another taper tantrum. So I believe that selling cash-covered puts, slightly out of the money, short-dated to make the most of a time decay, makes sense to get a decent return. So this is my plan, and I would like to know, what you think about that, Todd.
So hang on. You're talking about selling near-dated puts, secured puts in TLT, correct?
That's correct. Slightly out of the money. Short-dated ones.
Okay, just be careful. TLT has had every opportunity to rally up from this 116, 117. And if you've been following at my website, Trading Analysis, we've been scoping this bottom for some time. It's just not materializing. You're starting to see a pretty big move down. And if you look at the TLT here on the daily, we couldn't even get up through the 20-period moving average. We have a stock market that is firmly footed from a Fed that left us nothing. Bonds still look to be on the way down. I am getting a little bit nervous here. You talked about the currency risk. I think that is non-issue at this point, just because looking at a chart, if we flip over to the dollar, which let me just describe it to you. It's a little kind of esoteric the way I approach this, but the dollar is actually set to range trade for about 11 to 12 months based on our analysis. So that tells me that we could be on hold through 2015 into 2016. I'm personally long the euro, so I don't think currency risk is a problem right now. In terms of yield, you said you don't have a lot to invest. That's no problem. I do think bonds are coming off because the Fed is going to continue to stay on hold. So I'd be careful, as long as your secured puts okay, but look at that trend. I mean, why not just be short the TLT? Why not be long some puts and generate some income that way? Or talk to me. What are you thinking?
No, I think if yields rise a little, I get the chance to invest my money at a slightly higher rate. Right. If the TLT is put to me, I don't lose much. So That's my analysis.
No, I like it. I mean, I don't think bonds are absolutely going to fall out here because I do think that, as we discussed last week, there's a long-term relationship between an uptrending 30-year bond and the stock market at the longest duration. I do know implied volatility is quite high in bonds right now. So it makes sense to sell premium. Exactly right. I like your strategy that way. It's just you are fighting the trend, and TLT has had every opportunity to move higher. So I'd just be a little bit careful there. Perhaps look at some of those shorter term, like the 7 and 10 year bond ETF. The symbol's escaping me right now, but I don't know. I'm actually looking to move on the short side of this position. I understand if you're trying to generate some yield. Yield is going up. It's certainly coming into the U.S. You're starting to see, the yen decline, which is indicative of higher interest rates in the U.S. So just be sure you're protected in those short-term puts, because I think the bottom is starting to fall out of TLT here. So I hope that helps from a directional point of view. That helps, indeed. All right, beautiful. Anything else you're trading here, or are you just focused on the TLT? No, for my personal investments, just the TLT. I'm interested in the stock market, so, time to time I will tweet you questions, not necessarily because I have a portfolio to trade, but because I'm curious and I like listening to you. That's great. Now, let me just ask you, what's the feeling on the ground here regarding Greece? I mean, I know you're in Paris. What are we thinking from the European point of view? If you watch, non-business television in France, they talk about it, but, they don't seem to be overly concerned. It's a concern for, the Greek population. Yep. But in France, people are not worried, quite angry that, they will bail out Greece in another time, but, it's not a big deal for, the average French person. And I can tell you that's what's being confirmed on the chart. I mean, I'm personally long the euro right now through the FXE. I think the dollar is kind of on its tail a little bit right now because the Fed did not give us anything in terms of a rate hike. And from the chart, believe it or not, that hard right edge of the chart is a leading indicator to where fundamentals will be. And right now, the markets are telling us there's not much of a chance of a rate hike in 15. So if Greece can exit quietly, we'll see if that happens. The markets are saying right now it's going to be received well. I'm long the FXE. I like euro higher through this 112. We're looking at the FXE. So just keep an eye out for that. I think that's another good trade for you. Yeah. In my opinion, they will kick the can down the road. That's my opinion. Sounds great. Sounds great. So one more time, and I promise I'll never mess this up. My French is horrible. It's Mathieu. Mathieu. But don't worry. Don't worry. I don't urge you to say Mathieu. Mathieu. All right. Yeah. Call in. I promise I'll get it right next time. Thanks for being such a loyal follower, and we will talk to you very soon, okay? À bientôt. À bientôt. Au revoir. All right, au revoir. Goodbye. All right, great. Thanks. We have an email up from Rishi. Rishi says, do you think Coors is forming a double bottom and could charge up to the $50 plus, or should we steer clear? Let's take a look at KORS. We are looking at it like a stock that is not performing well. As I mentioned, consumer discretionary, we've had some retailers performing very well. This is a stock post-earnings that really got crushed through the $60 mark on huge volume. There are tons of charts in the trading nations, not just nation, that's starting in the bottom left and going to the top right. That chart, being a very simple man like I am, is going from the top left to the bottom right. I don't like that chart. That is a broken stock. There's plenty of names out there in the retail world that are acting extremely well. Please don't look for a double bottom like this. That is a nasty looking chart, okay? So leave it there. We like to trade with the trend, especially in markets that are approaching 7+ year highs. So just keep an eye on that, all right? So speaking of one chart that is also going to the bottom left, we have a tweet on Twitter about Twitter. Long Twitter based on product value, not speculating opinions. Twitter might be 40 weeks in weeks by its way. That's kind of a cryptic tweet about Twitter. And it's funny, I was actually getting into it quite a bit with a few Twitter tweets in the Twitterverse about this stock. Talk about another broken stock. I actually took a short in this just Friday, and my Twitter handle at Todd Gordon Trade. I got into it and saying, listen, this is a prime takeout candidate, especially with what's going on here with Apple and the Taylor Swift kickback and all that. That was quite amazing. How do we really start to monetize this company, and are they a prime takeover candidate? Yes. I do think so. But as we're approaching this low from Twitter down around the 35 level, that's a broken chart. Again, with the NASDAQ that's acting so strong, that's a broken company right now. And minus a bid, I think we're going to get down to test the $27 to $26 area there just after the IPO. So remember, it's always dangerous to be long the to be short the stock, without any kind of protection. So that's why I think put spreads, debit put spreads are the way to trade this if you're going to be on the short side, right? You have a fixed investment, you're buying out the money put, you sell one slightly below, you have a fixed amount invested in the company, and if a tape bomb hits, being that Twitter is taken over, which we'll see, the risk that you face is just what you've deposited on the trade, the margin. So I think the stock does stay below 36 and a quarter, trades down towards about 30. I'm going to continue to play that. And if we start to get the market to roll over, that's going to help us. But Twitter, I think, is a broken stock. So just keep an eye on that one. We are along the NASDAQ, as I said. I have some Starbucks. We could talk about that one really quickly. We are still kind of piecing out of this one, but talk about a beautiful chart that's going from the bottom left to the top right. Starbucks is very well positioned to continue higher. We are long from last week. I'm going to look to take some profits up into the 55 area and maintain that one. I'm long the euro. I'm long the NASDAQ. We have Starbucks. I'm short the gold market, and that really is all the positions we're carrying right now. So pretty quiet. A lot of maintenance right now from a week that was very heavy with economic data. This week is quiet. So we're just going to kind of maintain right now as we move into the summer. So that's going to do it for us. Live Trading Nation, as always, if you have questions, tweet us at Trading Nation, or if you'd like to call in to us or email tradingnation@cnbc.com. Be sure to hit us next week, 1 p.m. Eastern Time. We'll see you then.